A special thank you to each of our subscribers who make this channel possible. Here's today's story. In the lead up to the upcoming presidential election, taxes are taking center stage in the political discourse, with implications that could affect the financial landscape for millions of Americans. As the expiration of Donald Trump's 2017 tax cuts looms at the end of 2025, the discussion around tax policy has never been more critical. Vice President Kamala Harris has made it clear that if she secures a victory for the Democrats, significant changes to the tax code are on the horizon. Harris has promised to provide tax relief for over 100 million Americans, particularly focusing on middle-class families, low-income workers, and households with children. During her campaign, she has pledged to maintain tax cuts for those earning less than $400,000 annually while expanding tax credits and deductions for low-income families. The Earned Income Tax Credit, EITC, is set for an expansion, aiming to provide a financial incentive for individuals to remain in the workforce. One of the most noteworthy elements of her tax agenda is the proposed increase in the Child Tax Credit, CTC, from $2,000 to $3,600 per child, with an additional one-time credit of $6,000 for families welcoming newborns. This expansion is projected to benefit low-income families significantly, with estimates suggesting an average gain of $2,750 from these enhanced credits. Harris's tax reform plan also includes the elimination of taxes on tips, which would directly benefit service workers in key swing states. Furthermore, she aims to raise the minimum wage and expand tax credits for low-income housing, making strides toward affordable health care by proposing additional subsidies to the Affordable Care Act, ACA. However, the question of funding these ambitious tax cuts remains a hot topic. Critics argue that while Harris's plans focus on wealth redistribution, they lack clarity on how to cover the associated costs. The Committee for a Responsible Federal Budget estimates that her proposals could add $1.2 trillion to the national deficit over the next decade. To counterbalance this, Harris has outlined a strategy to raise $5 trillion in taxes by 2034, targeting large corporations and high-income earners. This includes raising the corporate tax rate from 21% to 28%, a move that could generate approximately $1.3 trillion over 10 years. For individuals earning over $400,000, she proposes reinstating the top income tax rate to 39.6%, up from the current 37%. Additionally, Harris plans to increase the long-term capital gains tax rate for those earning over $1 million from 20% to 28%. One of the most contentious aspects of her proposal is the taxation of unrealized capital gains, which would apply to assets that have appreciated in value but have not yet been sold. This change aims to close loopholes that allow wealthy individuals to pass on significant wealth without taxation. Harris is also advocating for a billionaire minimum tax, imposing a 25% tax on assets over $5 million for households with a net worth exceeding $100 million. While these measures aim to address wealth inequality, critics warn that they could dampen investment and economic growth. The political landscape will play a crucial role in determining the fate of these proposals. With Republicans poised to resist significant tax hikes, the ability to garner bipartisan support will be essential for Harris's plans to materialize. As the election approaches, voters will be watching closely to see how these tax reform proposals will unfold and what they mean for their financial futures. The stakes are high, and the outcome could reshape the financial landscape for countless Americans. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.